Bags! Hey gang, I'm Dr. Who. This is Accounting as a Joke, where accounting makes sense so you can make dollars. Today we're going to take a look at a proper illustration of how to create closing entries based on the adjusted trial balance. So if you're unfamiliar with closing entries, don't fret gang, I dropped the link to get you up to speed in no time. So with that being said, let's get it. So it tells us that the adjusted trial balance for Stone Sign Company is as follows. Let's see what we have here. We got us a nice, beautiful trial balance. And then it tells us to assume Stone Company has a January 31st year end, journalized Stone closing entries. Yep. How much income or loss did Stone Company earn? Okay, yada, yada, yada. Okay, so we're going to get to it, gang. We're closing out accounts. And we know whenever we close out accounts, there's a 4-step process that we have to utilize. Step 1 is to close out your revenues. Step 2 is to close out your expenses. Both of those steps, we're going to close out those accounts to income summary. Step 3, you're going to transfer that income or loss into retained earnings. And step 4, you're going to close out your dividends into retained earnings. Now, for all the reasons and the bells and whistles of why we do this closing process, check out a link to that video to get you up to speed with that. But for right now, we're going to get to this. So if we take a look at our trusty trial balance, we are only concerned with the temporary accounts, and we know that our temporary accounts are revenues, expenses, and dividends. So our first step is going to be to close out our service revenue, and we see that we have a service revenue amount of $17,300. So we're going to debit service revenue for $17,300, and we are going to credit income summary. We're going to check our answer. Well done, gang. Next, we're going to close out each individual expense account into income summary, and we're going to close out those expenses through a credit, and we're going to debit income summary for the total. We're going to check our answer. Well done, gang. Next, we're going to transfer our net income or net loss into retained earnings, and we're going to calculate that by subtracting our total revenues for the period minus our expenses. So as we can see, we have a total revenue of $17,300 for the period, and we have total expenses for $6,400, which is going to give us a net income because our revenues are higher than our expenses. That particular net income will equal $10,900. Therefore, we're going to increase our retained earnings with a credit for $10,900 and debit income summary. We're going to check our answer. Excellent job, gang. And last but not least, we're going to close out our dividends count into retained earnings by debiting retained earnings and crediting dividends. So we see that our dividends amount for the period is $800. So we're going to input that as well. We're going to check our answer. Good job, gang. Next, requirement 2 wants to know how much net income or loss did Stone Company Sign earn for the period. And how can you tell? Easy breezy, gang. Step 3 of the closing process has already revealed that we have a net income for $10,900. How do we know? Because our revenues exceeded our expenses. Therefore, we're going to just throw that number in there. Check our answer. Excellent job. And how do we know? We know because our service revenue exceeded our total expenses by this amount, and this was the balance in income summary when it was closed. Remember, gang, not only does step 3 transfer the net income or loss into retained earnings, it also simultaneously close out the income summary account. Check the answer. Fantastic. So there you have it, gang. A quick, easy illustration of how to properly close out accounts. Hopefully that made sense to you. Now you're further to chasing the bag with this accounting information. If so, smash that like button, smash that subscribe button, and share the channel with your friends so they can chase the bag as well. As always, gang, I'm Dr. Who, and I'll see you soon. Bags!